My next guest says this strike can last well into November, given the current levels of UAW's strike funds and its strategy to halt work at targeted plants. Out of the big three, he does expect Ford to reach an agreement first. It has the largest union membership. GM shares could be the most impacted, and they're already down 2% since the strike began. Let's bring in Dan Levy. He covers autos at Barclays. Dan, overall, I'm surprised how well the auto shares have held up.
Hi, Kelly. Thanks for having me. Yeah, I think some of the stock price performance perhaps reflects that these stocks were already embedding the impact of the strike. Folks have had a sense that there was going to be a strike for quite some time, and this is now playing out in many ways as people thought. The initial impact based on this more targeted approach is perhaps not as bad as what some people feared, and I think there's currently already some impact that's being embedded in terms of ultimate cost that's going to be absorbed by the OEM. So there's already some of this that's being embedded into the stocks.
So when we look at, so GM made $10 billion in profit last year, Ford lost $2 billion. If they get two-thirds of what they want, the union that is, how much annual profit could we be talking about as a hit to these companies?
Yeah, so on a pre-tax basis, for 2023, GM is looking at something in the $13 to $14 billion range, Ford in the $11 to $12 billion range. Just to frame what the costs are for labor, we're talking about roughly $6 to $7 billion annually for U.S. hourly labor. Some of the requests that we've seen have been up to essentially doubling that. So if the D3 gave in on all of the requests, it would be a very significant hit to total profitability. We think that a more reasonable scenario is that there's maybe $2 billion of incremental costs that's absorbed by the OEMs, and they're likely taking some actions to offset that via cost saves or perhaps passing some of that to suppliers or holding on to price where they can.
So you think this will be resolved with Ford soonest? Just kind of give us the detail on that. And when we say resolved, do we mean resolved because the workers get more of what they want, or Ford has some leverage over them?
The setup for Ford is a little different than it is for GM and especially for Stellantis. Ford is the largest employer of U.S. hourly labor between the D3. There's a much higher percentage of their U.S. manufacturing in the U.S. versus Stellantis and GM that are relying a little more on Mexico. From a financial standpoint, Ford is a little more disadvantaged than GM and especially Stellantis, weaker margins, and historically they've actually generally maintained better relations with labor than we've seen at the other two automakers. So we sort of had a sense that there was a better setup. We saw Ford reach a deal with Unifor, the Canadian workers, the Canadian union, earlier this week. And so it's not a surprise that we saw this morning that there is progress. We think perhaps a reasonable scenario is that in the next week or so, perhaps, there is full resolution. At the other two, at GM and Stellantis, GM, maybe it'll take a little longer. Our assumption is that a lot of what's going on at this point, we think that there will be some discussion on wages and COLA, but another key discussion point, and this is what's differing between the automakers, is product allocation, plant closures. We've seen reports, obviously, that Stellantis wants to close 18 plants, and that's probably a sticking point in these discussions.